Good afternoon, boys and girls. Welcome to Liberty Golf. It's Tuesday, June 7th, 2022. Hope everybody's having a great day out there. It's a little overcast here in Colorado and getting some raindrops here and there, but we need the rain, according to the people who freak out all the time. But anyways, if you notice, I trimmed up the beard. Look, it was getting a little shaggy on the sides, and obviously I chopped off quite a bit. I went back and was looking at old videos yesterday. I was like, damn, it was like hanging down to here. So I apologize if I look too scruffy at times. My wife really likes the super long Viking beard, but it doesn't always come across real good on camera. So, all right. If it's your first time watching, give me a big old thumbs up. One of these. No, don't give me a down thumbs up. Give me an up thumbs up. I really appreciate that. Like, share, subscribe. Please share this with anyone who you think might be worried about what's going on in the world. I'm sure there's a lot of folks out there who, are worried about what's going on, but just don't know where to go. So, hey, I know somebody. Me. So, all right. Well, let's go ahead and jump into the markets for today. Things look pretty good. A second positive day in a row. Boy, that's... it's just crazy times right now. All right, the Dow Jones finished up 0.8% at 33,180. S&P 500 was up 0.94%, closed at 4160. Nasdaq was up also 0.94%, closed at 12,175. Small caps are up 1.69%, pretty good. The VIX fell 4.19% today. It's currently sitting at 2402. Headed over to the other exchanges. Canada was up 0.52. Brazil was flat at down 0.06. Mexico up 0.21. Moving over to Europe, Germany was down 0.66. The UK down 0.12. France down 0.74. The Euro Stoxx down 0.83. Netherlands was down 0.38. Spain was flat. It was up 0.06. Italy down 0.81. Switzerland was flat at up 0.04. Portugal up 1.21%. That's kind of a bright spot in Western Europe. Let's see here. Belgium was down 0.36. Austria down 0.28. Sweden up 0.23. Denmark up 1.27. Moving further east, the Russian exchanges were both up. The MOEX was up 0.41. The RTSI up 0.17. Let's move on down to Asia, or over to Asia. Japan was up 0.1%. Australia down 1.53%. New Zealand down 1.6%. Headed over to China, the Shanghai was up 0.17%. The SESE component was flat at down 0.02%. China A50 up 0.75%. The DJ Shanghai up 0.26%. And the Hang Seng was down 0.56%, and the Taiwan weighted also came into the same, down 0.56%. So kind of mixed, looks like in Asia, and some bright spots across Europe, but they were mostly down. Nothing dramatic. Most of them looks like they were, less than 1%. And then here in the U.S., obviously things were pretty good today. So not too bad, all things considered, that, the rest of the country is in a mess. The economy is a mess right now. So, we'll see what happens. All righty. Well, let's go ahead and jump into today's market recap. S&P 500 shakes off target slump as dip buyers emerge in tech. The S&P 500 cut losses Tuesday as gains in tech offset falling consumer stocks after Target's warning on profit weighed on investor sentiment. Target cut its margin guidance for the current quarter to 2% from 5.3% previously, as the retailer takes measures including ramping up promotional activity to cut excess levels of inventory, sending its shares down more than 3%. Other retailers, including Walmart and Best Buy, were down about 2% each, pressuring the broader consumer discretionary sector. The early day dip in tech stocks, however, proved short-lived as big tech moved into the green to help the broader market steady. Apple, which was down about 2% in pre-market trading, turned positive to trade 1% higher as investors continue to mull the tech giant's new product announcements, including its buy now, pay later product revealed on Monday. Yeah, because going into further debt is a great idea for a phone. It is always funny that, people will cry poor, yet they've got, one of these things in their hand, which is, anywhere from, $500 to $1,500, depending upon the data capacity and such. So anyways, all right. Where were we? Rising energy stocks were also a catalyst for the broader market rebound as oil prices climbed on bets that easing COVID-19 restrictions in China will boost demand. APA, ConocoPhillips, and ExxonMobil were the biggest sector gainers, with the latter lifted by an upgrade from Evercore to outperform from inline, citing attractive valuations. The firm raised its price target on the stock to $120 from $88. A 4% climb in Novavax pushed healthcare stocks higher after the drug maker said the Food and Drug Administration panel will meet on Tuesday to consider whether to approve its COVID-19 vaccine. Yeah, I've been seeing headlines about that all day. And if the FDA does approve it, does that really mean anything? I don't know. There's plenty of drugs that have been approved through the years that, going back, like heart medicines and things like that wound up killing people. So I can't think of them off the top of my head, but every drug that there's some sort of a lawsuit after the fact and it's pulled off the market, that drug was approved at one point. So I was listening to a podcast recently where they were talking about the junk in our food. And like the high fructose corn syrup, and there's a lot of things that are in the food that we buy that's been processed at the grocery store that just aren't real healthy for us. And the person was saying, well, I just don't understand why the FDA would allow foods that are unhealthy to be sold in stores. And it's like, then the person asked them, well, do you trust the government when they approve medicines and medications? And they're like, well, not really, because a lot of times they come back and recall them. And they're like, well, it's the Food and Drug Administration. So if the drug side of it doesn't do a great job, why would you think the food side would be all that great either? So I imagine they're just gangsters and they take payoffs, and that's how things get approved. All right, jumping back in other news, Robinhood markets slumped nearly 7% on reports that the U.S. Securities and Exchange Commission is closing on plans to create an auction-styled system to increase competition for trading orders, making a potential blow to trading brokerages like Robinhood that rely heavily on rebates from exchanges and payment for order flow from market makers. Insane. Yeah, from what I've understand is the way some of these online brokers, especially the ones you can use on your phone, that they were kind of skimming on prices, and that's how they were making their margins. And so we'll see if this is a good change or a bad change. I really don't have an opinion on it at this point, but we'll see how it goes. All right. Next article has to do with our favorite subject, energy. Oil up near 3-month highs, awaits U.S. inventory data. This comes from investing.com, written by Bharani Krishnan. Oil prices settled up at near 3-month highs on Tuesday as global supply tightness broadly supported the market while traders awaited U.S. inventory data on crude and other petroleum products. WTI settled up 91 cents or 0.8% at $119.41 a barrel after a session high of $120.25. On Monday, WTI ran up to $121. Year to date, the U.S. crude benchmark is up almost 60%. Brent settled up $1.06 or 0.9% at $120.57 a barrel. Earlier, Brent had reached an intraday high of 121.18, following with Monday's run to 121.85. The global crude benchmark is up 56% on the year. So if you've been investing in oil stocks, you probably made a nice return. So oil hit 3-month highs on Monday, following through with support extended since last week from Europe's ban against most Russian oil products, China's lifting of COVID restrictions, strong U.S. job growth, and a Saudi hike in selling price of its crude have also provided a firm bed of support to keep a barrel from sliding beneath $117. The rally in oil came despite a decision last week by the Organization of the Petroleum Exporting Countries and Allies, together called OPEC Plus, to increase output in July and August by 648,000 barrels per day, or 50% more than previously planned. Again, if you've been watching along, they've been saying this for months now that OPEC is going to increase their production, and we have yet to really see it. I'm sure they're really happy at the prices that they're making on the current spot price of oil. Included in the pact was Russia. Which already lost 1 million barrels in daily production due to sanctions, and countries such as Angola and Nigeria have repeatedly failed to meet prescribed output targets. Thus, the net impact of OPEC Plus increase was likely to be around 560,000 barrels daily compared to the scheduled 1.3 million, because most in the Oil Exporters Alliance have already maxed out their production, analysts said. So like I said earlier, they've been falling short on their production, and they keep saying they're going to increase it. Quote, the fundamentals remain bullish for oil prices as China continues to reopen, and the OPEC Plus production hike does little to alleviate the tightness in the market, in quote, Craig Erlam, analyst at online trading platform Owanda, said on Tuesday, quote, still, it's been a very strong run over the last month, with prices up more than 20% from May lows. We could potentially see some profit taking in the short term, end quote, Erlam added, quote, but it's hard to imagine it being too severe, barring significant growth downgrades or surge in COVID cases in China, end quote. Tuesday's trading in oil drifted as market participants awaited weekly U.S. Inventory data from the API, or the American Petroleum Institute. The API will release at approximately 4:30 p.m. Eastern a snapshot of closing balances on U.S. crude, gasoline, and distillates for the week ending June 3rd. The numbers serve as a precursor to the official data on the same due from the U.S. Energy Information Administration tomorrow on Wednesday. For last week, analysts tracked by investing.com expect the EIA to report crude stockpile drop of 1.92 million barrels versus the 5.07 million barrel reduction reported during the week of May 27th. On the gasoline inventory front, the consensus is for a build of 1.08 million barrels over the 711,000 barrel decline in the previous week. While with distillate stockpiles, the expectation is for a climb of 1.06 million barrels versus the prior week's deficit of 530,000. So we'll see when those reports come out, and if we have some surpluses. Again, the last few weeks or months, it's primarily been a situation where one report says things are going to, we're going to have a surplus, and then the next report comes out and said we actually had a negative. So again, we'll see. It's it's a long road we're on right now. So, all right. Next article: U.S. faces unacceptable levels of inflation. Yellen tells senators. Yeah, she was getting grilled. It's written by David Lauder and Andrea Shalal from Reuters. The U.S. faces quote, unacceptable levels of inflation, and an appropriate budgetary stance is needed to help dampen inflationary pressures without undermining the economy, U.S. Treasury Secretary Janet Yellen told senators on Tuesday. At a Senate Finance Committee hearing, Yellen pushed back against Republican assertions that the highest inflation in 40 years was caused by Democratic President Joe Biden's $1.9 trillion American Rescue Plan, COVID-19 spending legislation last year. All right, well, let me stop. Yes, that didn't help. And Republicans pounding on that, they're a bit disingenuous, because the year before, I guess 2 years before, while Cheeto was still president, we had tons of spending under his watch too. And I imagine most of these congresspeople and senators were in office for the most part during that time, and they had no problem printing money like it was going out of style, because, we're headed towards, the world's going to die from a cold. So, I love pounding on Democrats as much as anybody because they spend money like water, but the Republicans are much better. Republicans are just Democrats that drive the speed limit, quite honestly. And, if you want to see what a Republican position on things would be, is just look and see what the Democrats position on something, 10 or 20 years ago, because that's really all it is. I suggest y'all join the Libertarian Party, where people actually really strive for small government and, liberty and freedom. But hey, there's not a lot of us out there. All right. Enough defending President Brandon. All right, quote, we're seeing high inflation in almost all of the developed countries around the world, and they have very different fiscal policies, Yellen said. Quote, so it can't be the case that the bulk of inflation that we're experiencing reflects the impact of the American Rescue Plan. Well, again, let me stop there, Yellen. The problem is that all the major central banks printed money like it was going out of style in the last 2 years. So, yes, some countries may have different inflation rates than we do, but when, the 6 or 8, the largest central banks in the world all printed the same amount or similar amounts of new money, that's the reason why we're seeing it everywhere. If it was just the United States could be a contagion to everyone else too, because we are the biggest player in the monetary system. But, like I said, anyways. All right, get back in here. Yellen says she saw the bulk of inflation being caused by supply and demand mismatches, including excessive demand for goods over services during the pandemic and severe supply chain disruptions. High energy and food prices caused by Russia's invasion of Ukraine have also pushed inflation higher. Russia only provides about, 10 to 20% of the world's oil. I don't see that, that going off, and it's still being used. So it's not like, yes, the Western countries are boycotting their oil, but, they're still selling it. So I don't think they're getting pummeled as bad as we think. She insisted that addressing inflation was Biden's top priority and said that elements of the president's proposed social and climate legislation could help lower costs for Americans, including for prescription drugs and clean energy initiatives. Yeah, I don't know how you connect those two dots, that, the Green New Deal is going to help with inflation. But, if someone wants to point that out to me, I'd love to see it. It sounds good in theory, but I just don't see the connection. Quote, we face current macroeconomic challenges, including unacceptable levels of inflation, as well as the headwinds associated with disruptions caused by the pandemic's effect on supply chains and the effects of supply chain disturbances in oil and food markets resulting from Russia's war in Ukraine, Yellen said in prepared remarks. Again, they love to point or pass the buck to somebody else. All right, Yellen had come under fire from Republicans after admitting she was, quote, wrong last year in forecasting that inflation would be transitory and quickly subside. She is facing tough questions on the issue from the Senate panel and from the House Ways and Means Committee on Wednesday. Quote, well, when I said inflation would be transitory, what I was not anticipating was a scenario in which we would end up contending with multiple variants of COVID that would be scrambling our economy and global supply chains. And I was not envisioning impacts on food and energy prices we've seen from Russia's invasion of Ukraine, Yellen said. She said that the Federal Reserve has primary responsibility for bringing down inflation and that she respects the Fed's independence in setting monetary policy. Quote, to dampen inflationary pressures without undermining the strength of the labor market, an appropriate budgetary stance is needed to complement monetary policy actions by the Federal Reserve, she said. The Biden administration is still pushing for a scaled-back version of its stalled climate and social spending agenda, which would offer tax credits for clean energy technologies and reform prescription drug pricing. What does prescription drug pricing have to do with clean energy? Again, they like to connect things that, it's probably AOC or one of those nutbags was, one of their big stances is providing, money for poor people. It's like, well, what the hell does that have to do with green energy? It's just a handout for your constituents. Yellen said that even though the United States is a major energy producer and exporter, it was, quote, virtually impossible for the United States to insulate itself from oil market price shocks and needed to press ahead with a transition to renewable energy sources. Again, not happening anytime soon. Regarding efforts to increase economic pressure on Russia, she said the United States was, quote, extremely active in discussing with European countries ways to limit Moscow's oil revenues. Yellen also said she was keenly focused on proceeding with the global tax reform deal among 137 countries, including a 15% global minimum tax. I am hopeful that Congress will implement this global minimum tax as part of its legislative agenda, end quote. She said another part of the tax deal, a reallocation of taxing rights to market countries, could have a slight impact on U.S. tax revenues. Yeah, again, It's funny that someone who pretty much has spent their entire life in the government is wanting to tax the citizens even more, because people who work for the federal government do not pay federal taxes. They're paid with federal taxes, which means any withholdings that they make just go back to the Treasury, and they're not actually adding to the bottom line. So, yeah, makes me laugh. All right. Let's see here. Some more good news. U.S. bars investors from buying Russian debt stocks on secondary market. I know I get a warning every time I log into TD Ameritrade about Russian securities and why I'm not allowed to buy or sell them. Not that that's something I would do dramatically, but it would be nice, as an independent financial advisor, to be able to buy and sell any security that I deem appropriate for my clients. All right. The U.S. Treasury Department has banned U.S. money managers from buying any Russian debt or stocks in secondary markets on top of its existing ban of new issue purchases in its latest sanctions on Moscow over its invasion of Ukraine. Despite Washington's sweeping sanctions in recent months, Americans were still allowed to trade hundreds of billions of dollars worth of assets already in circulation on secondary markets. The Treasury said in guidance published on its website on Monday that it will that the ban extends to all Russian debt and that all Russian firms' shares are affected, not just the ones specifically named in sanctions. Quote, consistent with our goal to deny Russia the financial resources it needs to continue its brutal war against Ukraine, Treasury has made it clear that U.S. persons are prohibited from making new investments in the success of Russia, including through purchases on the secondary market, a Treasury spokesman said on Tuesday. The rules do still allow U.S. investors to sell and continue to hold Russian assets that they already own. The Treasury move surprised some analysts, especially because it was posted in the frequently asked questions section of the department's website rather than announced with the most recent round of sanctions. Quote, the surprising new thing here is that trading of all existing debt has now been prohibited, at least for U.S. citizens, end quote, said Seaport Global Emerging Market Credit Analyst Himashu Porwal. Quote, we have been trading some of the names like Lukoil very actively, but now U.S. accounts will be unwilling to transact, end quote. The United States and its allies have imposed several rounds of measures on Moscow since February 24th, invasion of Ukraine. Russia calls its assault a special operation to demilitarize Ukraine. Kiev and its Western allies say it is a baseless pretext for an unprovoked war. Again, I'll remind folks out there, the U.S. has invaded many countries over my lifetime, and I don't remember anyone get their panties in a wad and, having sanctions on us. So... And, again, I thought this was a free country. We should be able to buy and sell anything we want, as long as we're not hurting other people. And, anyways, it's aggravating. All right. One last article. Remember earlier we were talking about Target. Target's latest warning is a bad development for the retail industry. Analysts explain. It's written by Brian Sozzi, editor at large. Didn't say for who. All right. Target's latest warning on Tuesday is apt to send shivers down the backs of its retail competitors in home and apparel. Quote, while clearly a negative for Target, this is a bad development for the retail industry generally, particularly those that play in categories where Target is most over-inventoried, which are seemingly home and apparel. End quote. Citi retail analyst Paul Lejeune wrote in a note to clients, quote, while many believe Target has taken its medicine when it guided down 3 weeks ago, today's announcement shows it's still struggling to adjust to recent trends, end quote. The discount retailer said Tuesday that it's aiming to cut inventory by offering discounts, canceling orders, and taking a harder look at expenses. The actions are meant to, quote, right-size its inventory for the balance of the year and create additional flexibility to focus on serving guests in a rapidly changing environment, end quote, the company said in a statement. Target stock fell nearly 4% on Tuesday's session, and the company's ticker page was the most active ticker on Yahoo Finance platform by midday. Quote, we actually do see a continued strong sales environment, traffic, and the top line continue to be strong. Target CFO Michael Fidelki told Yahoo Finance recently, quote, but over the past several weeks, what we have been able to continue to assess is the broader retail environment. And I think, as has been reported pretty widely at this point, the level of inventory in retail is high. And we also expect inflation and higher costs to be persistent, end quote. Fidelki was hesitant to say the actions, which are far from the norm for Target in the past 5 years, were tantamount to the retailer preparing for a recession, stressing that markdowns will be most acute in discretionary categories such as home goods as consumers curtail some spending. And while it's clear Target's increased sales in home furnishings this summer could place margin pressure on the likes of Wayfair, Williams-Sonoma, and TJ Maxx owned home goods, Citi's Lejuice sees Target's guidance rippling across the entire retail industry. Quote, with all the debate around the health of the consumer and questions about whether we might see a consumer recession over the next 24 months, we believe regardless of whether this comes to fruition at a macro level by technical definition, it's going to feel like a recession in apparel as we look out to the second half of 2022, Lejuice stated. Quote, at a time when many are looking to pass through higher input costs to the consumer, weaker than expected demand and high inventory is going to drive markdowns, creating an extremely unfavorable market equation. Well, I guess the good news is you might be able to pick up some things on discount while they're selling off their inventory. So, try to look at things from a glass half full perspective. That's just my nature. All right. Okay. Well, that's everything I had for today. I hope everyone has a fantastic evening. You can see Barney over my shoulder is really, really excited with the financial news of the day. If anybody needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. If you'd like to book a meeting or just give me a phone call, you're welcome to do so. Phone's not ringing yet. Anyways, all right. Well, hope everyone has a great night, and I'll be back tomorrow, guys. Have a good evening. See ya.